What is the biggest question in the mind of share market investors? Whether the Indian share market is in a bearish phase or not. Has the FII selling brought an end to the bull run? Or is the fall in the market just a healthy correction, which means profit booking before another rise? The picture of the market will depend on how you are looking at it. If you have shares like HDFC Life Insurance, HUL, Britannia, Kotak Mahindra Bank in your portfolio, then you might feel that the market is down. Because all these companies have fallen by 20% from their highs. A share is considered in a bearish market if it has fallen by 20% from its high. This is the situation of 13 stocks in Nifty 50. Leave the big guns, the situation of mid-cap and small cap is even worse. Out of top 500 companies in the market, 62% companies have dropped 20% from their 52 weeks high. If after looking at these figures you think we are in bear market, then have a look at the fall in Sensex and Nifty. Both the major indices of Indian share market are down just 7% from their record highs. Yes, just 7%. At one time, they were down by 15 to 16%. Nifty touched the low of 15,671 on 8th of March. But markets recovered nicely. On Monday 28th March, Nifty was at 17,222. Last year in October, Nifty went to a record 18,604 level. So, your stocks in the portfolio may be in a bear market, but that's not the case with the Nifty and Sensex. In fact, there is not one single factor behind the fall in share prices. In some companies, corporate governance issues discouraged investors, while others were trading at very expensive valuations. The rise in commodity prices, crude oil inflation also prompted some investors to sell the shares of many companies. Rise in interest rates by the Fed triggered the outflow of FIIs at a quicker pace. In the last 3 months, FIIs have withdrawn more than 1.11 lakh crore from the Indian market. Now let us understand when these companies will come out of the bear market. Market experts believe that the next quarter is going to be very challenging for the companies. Devon Choksey, MD of KR Choksey and Securities said, "Till now, companies were using cheaper raw materials which they already had. Now they have to buy expensive raw materials. This will impact their profit margins because companies can pass on the prices to customers only to an extent. That is why the April to June quarter will be very challenging for the companies." The big question is, what should investors do? Currently, it seems that the market doesn't have one clear direction. Experts suggest waiting for some time. Invest in good companies gradually. The inflow of FIIs and hope of improvement in margin for companies will be needed to boost the market.